on the basics, I think that from an international institutional point of view, what we want to do is being able to sell. So we deliver the performance when we buy, but particularly when we can sell. So key markets are still gateway cities across Europe in terms of size, but also in terms of liquidity. That would be quite hard to be able just like to do that, the sort of trophy assets such as the sovereign wealth fund that buy for 300 or 400 million euros, because the only potential buyers in the next 10 years would be the same sort of type of investor. So we really are careful about the exit strategy, and therefore we focus on the key central locations. So that's stability, safe havens, London, Germany, Poland, where we can get growth, central locations of Paris. We try to add value and create performance delivery, and we manufacture core in central locations. We try to take value-add risky investment strategies, and we are now starting to reopen our allocation to more risky perceived markets, such as Spain, for instance. Next year, I think, is going to be a turning point when we don't want to miss the trough. We want to be there in order to get profit of the full upswing potential. So that's where we will be.
I have to say again, it depends, because when you look at core investors, certainly it's where the stable, secure markets are, and that is first the countries, and then it's the cities. Which is quite a pity, because then you have you can have very core cities in countries which are probably not as seen as core in the European environment. So, for example, would German investors right now go to Warsaw, for example? And I think they would, and they have been doing that. Would they go to Madrid? Yes, they do, and they started in 2013. You've seen 3 or 4 German investors buying in Spain again. So I think it's really depending, when you're a core investor, how what is the product you can get? Is the product you can find, is it core or not? Would they go to Dublin right now? I'm not so sure. Even if the investment could be as core as an investment in Madrid, but the market is still considered a smaller market, not as liquid, and so I think it's for the core investors, it's very much location, micro location, and then for the opportunistic investors, I think it's really country, and it's a more macroeconomic view on what is going to happen over the next 3 to 5 years in those markets.